is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup for TFNN. You are watching the Tom O'Brien Show. Quite a day, right? So this big post-election rally kind of slowing down a little bit, at least for today. Not even really contracting, to be honest. You had a lot of the stocks kind of open down, much more down than they are right now, especially with Tesla. I was actually so crazy this morning. I wanted to get into TSLS. I didn't pull the trigger on it because I had other things going on, but that would have been a pretty clean kind of daily run on that. What my thought on this is going to be is what is going to bring about kind of this sell-off, right? At least just a momentary contraction. I mean, we have run so high post-election here. I mean, even in Tesla in particular, right? I mean, look, you have like 3 major gap ups. This is on decent earnings, right? Another gap up, another gap up again. Not to say, again, you've heard me say on here multiple times, I am very hesitant to short Tesla. But I do see that there could be something that comes in, probably more news-based, that you could see a massive kind of contraction or at least some kind of sell-off here. You're seeing a little bit coming off from, what we were at 358 as a high. We're back down. I think we made a low of the day around 323.32, trading at 331.40 right now. I do think in the long term, Elon Musk being as close with Trump as he is, at least right now in this kind of transition period, Tesla still does pretty well, right? But I mean, we have economics data, right? So if we don't see much of a budge in inflation going forward, that could be somewhat of a trigger for the market to be like, hey, you know what? Now is the time to sell off some more. So we're following that pretty closely. At least I am. You have Rocket Labs reporting today. This is another example of a stock that was off way more in the morning, and now it's recovering right now. So you saw that just for a moment, it was off just about 0.88%, but earlier today it was off about like 3-4%, coming right back up, only off about 1% right now, trading at 14.63. You have some interesting stuff with Rocket Lab, right? So they are launching their new Neutron line. I believe they tested I think it's called the Archimedes thruster, and it was successful. They're supposedly supposed to do 4 to 5 launches by the end of the quarter. It seems like they've only really done 1 or 2 right now. So we'll see. I believe it's 1. So we'll see what their forward guidance is on that. They also had lower guidance for revenue for Q3 that they're going to be reporting on than they did in Q2, which, is interesting, I would say, right? So let's, I'm not in this right now. I think I might. My big thing that I'm interested in saving capital for is going to be Cisco. Anyways, we'll talk some more about that. We have a great show for you today. We're going to be joined by Basil, Chapman, and Tim Ward. Let's actually go over to that right now. So as you guys heard yesterday, Basil Chapman is having an opening call subscriber webinar. So that is a subscriber-only webinar, okay? This is going to be very nice. Sectors and stocks for the next market phase. Of course, we're in a very transitional period, as I was just saying. The market is rallying very strongly. You have sector rotation to continue as new groups rally. Former out of favor big losers are becoming big winners. That is going to be this Thursday, November 14th, 4 o'clock to 5:30 p.m. Eastern time. So if you're a subscriber, make sure you show up there. You email me at jacob@tfnn.com. And if you're not a subscriber, I'd really recommend checking this out, at least just for the month, to see what you can get out of it. You get access to all of the other newsletters, or excuse me, all the other webinars that he's had. And if it is your first time ever, you get a 30-day money-back guarantee. If for whatever reason it doesn't work out for you, we're betting that it's going to, and it's essentially risk-free right there. So really, come in, check this out. Again, if you can't make it, that is okay. We're going to record this entire webinar. That's going to be up for you. And if you're a subscriber or become one at the end of this day, you're going to get access to all of his webinars that he's done in the past. We are joined right now by Basil Chapman. Basil, how are you doing?
I'm well, Jacob. How are you?
I'm doing well. Just a fine Tuesday here in Florida. A little bit hot, but can't complain.
Well, it's very windy here.
Good.
So,
we're gonna get some of that this weekend, hopefully. Basil, what are we looking at right now?
So regards to the webinar that's coming up, we have already started implementing this particular format of looking at what did work very well and then had huge declines and has started to come back quite strongly. We're looking at the stocks and sectors that have had huge moves. I mean, gold could be one of those, and taking a breather. That's really important. And what we want to be looking at in terms of portfolio, looking at our particular picks as if it was a portfolio over the coming many weeks, and that's going into the end of the year. So with that regard, looking at the Dow at this particular point, the Dow is at, as you mentioned, a spectacular move from a week ago. The 41,649 low that was made the beginning of November, we're at 44,047 right now, but we did hit yesterday 44,486. This is the Dow on the left side chart. But if I'd like to just explain that. So I like to look at each segment time-wise separately. For instance, the Dow daily, this big spike with a big gap, this gap doesn't have to be filled yet. Maybe later on it will. Near-term gaps will be filled, but we haven't even got those. So what's really important is I like to look, and there's a daily chart on the left, is the indicators. So the 9-period moving average is above the 14-period moving average, so it's green. When it's below, it's pink. That's a good sign the price is way above, and that gives 43,400 the 9-period moving average key support if that's to break in the next week or two. So that's number one. But look at the MACD, the moving average convergence, divergence. The histogram, that's these little vertical lines, are really strong. And this gray line right here, which is the RSI, doing very well. The stochastic is flat at 93%. I always say, if you are long, and we've been long for a long time, and we've added to that position, if you are long, you want to see the stochastic holding steady up in the 90% area, because that is a confirmation. That's what you really want to see. All the textbooks say over 80% is overbought. I say overbought, that the implication there is, something's wrong. No, that's exactly what you want. 80 and then going to 90, then 95. At some point, you know it's going to come back down into the 60, 50% area, but as long as it's flat, that's really good, and that's what we've got. So this, to me, is very positive. That's the daily. The weekly chart had a big spike to the upside, and all the technicals here are also very strong, and the same with the monthly. So,
Basil, stay right there, Basil. Folks, we'll be right back with Basil Chapman, the opening call newsletter. Get in here, get for the webinar. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman. He is the author of the Opening Call newsletter. This Thursday, 4 o'clock to 5:30 p.m. Eastern Time, he is having a subscriber-only webinar. Again, for the price of his newsletter and the value you get from not only getting access to this webinar that he's going to do, but all prior ones. It's just phenomenal. Basil, we were looking at, I guess, the Dow here before we went to the break. What else are we checking out?
So I wanted to give that as a backdrop to say,
Yeah.
so far, the technicals, and I'm doing this purely on technical, there are fundamentals that I add to it, but at this point, I really want to look at the technicals and the daily, the weekly, and the monthly chart of the Dow, the Dow weekly and monthly, as I say, as well as the S&P and the QQs are all still very good, and the IWM has been very, very, this has been a very strong rally. Before I get to that, I thought I'd just do this. I want you to talk about, so the S&P has gone to an all-time high. Yes, there was an all-time high today. It's just a little bit below that. Again, the daily chart is very strong. Stochastic at 94%. That's great. The weekly chart, stochastic at 90%, 9-period moving average over the 14, and the breakout of this long-term from the March 2009 666 low, he has a trend line, and we've gone above that for the very first time ever over the last 5 months. It's every month it's been above it, and the last 3 months it's actually closed above this green line, what I call a Chapman inside track, and I'll talk about these particular indicators. And I've been saying there has to be a time where the IWM, the Russell 2000, plays catch up. We've seen patterns repeat over and over in the market. It's like a, it's like a fractal. It's like something in human nature. One party does it, and at some point you're going to get another party to do that. I mean, people, don't mean party per se. Now, what we're looking at is, so the S&P has been very strong. So the IWM, and we were very fortunate. We got along the IWM, the Russell 2000, the day after the low of 196.60 on the 5th of August, and we've been long, and we've added to it, we've subtracted to it, and we've actually added again. We waited for today's dip. Every day I give a market call, and I discuss what we're looking for that particular day. I was anticipating some kind of a slide today, and if there was that slide, there were certain things we wanted to do. And that's why I say, if people are interested in my webinar, you got to kind of sign up as soon as you see it advertised if you're really interested, because we are putting positions on them. They don't wait for us. We've got to be absolutely prepared for us. So that's a very important thing. So the IWM is very strong in this cup pattern, cup formation here that says that if it breaks the high that was made of 222, and it's done that now, then the next level would be the all-time high of 244.46. So that's a pattern that we look at. So talking about patterns, I'm just going to add this quickly because there was something else I wanted to add, but I'm going to say we were looking, I brought this up the other day, well, a little while ago. I said, look, there's a pattern that forms in the market. It's called a cup and handle. Yep. You can see in this monthly chart of the, this is the, right here, if I can find iShares Transportation Average ETF. There's this beautiful cup formation, and then it makes not one of my favorite patterns unless you're going to play this to the upside and you want to get it as this handle pattern is starting to move to the upside. I said, and patterns repeat. They don't know. They're not connected to one another. They just repeat. Well, have a look at this pattern right here. A cup and a handle, and it broke out, and that's the Bitcoin futures. So we were very fortunate. We got into the IBIT, which is the iShares Bitcoin, about a week and a half ago. Great. And you can imagine it's done really well. Yeah, no kidding. Bitcoin, as we're speaking, is at an all-time high. So that's, and there's the same pattern. This is the handle part of the cup and handle. And this is a pattern that I call, oh, I had erased it. I have it in different, but I'll show it to you now. It's called the Chapman wave cup and ladle. It's not the handle, where the handle stops at the previous lip and then makes this little cup formation. My technique that I developed a long time ago, just by observation, is that if you go to a peak A and a B, and if you can powerfully go through the left side high, you can go much higher and you'll still get to a leg D, because D is always our target. So in the daily chart, the Bitcoin has gone to a leg D. In the weekly, it's only a leg C. And the futures, it is a D. And that's the particular pattern there. Now, I'll bring this up because I mentioned this to you a little while ago. I said, I keep getting calls about, we once had DraftKings, but I found that the pattern that I was looking at was not that favorable. The pattern that I really liked was in a kind of a cousin called Genius Sports Limited, does the same thing, data, betting, marketing from London. And GENI is the symbol. So we had this, and I had the same Chapman wave cup and ladle pattern, which said that if we break out sharply here, they should go to at least a D. And then I've also got a pattern that I call left side, right side. This is price symmetry, where you can use the number of bars on the left side to the number of bars on the right side to match in time a particular formation. So there's the cup. There's a little mini handle, and it broke out, and I guess it had earnings. I thought I typed in here that the earnings were on the 15th. We had two positions in this. We took profits in one, and we've still got one position from in the 650s. Here it is at 9.39. It's up 16% today alone, and it must have had earnings. So this is the type of thing I'm looking for. I like to spread for subscribers. I like to have price points. For some people that they very much like the under $10 stocks. Well, yes. This is an under $10 stock. I like to have those. I have the mid-priced. We have Microsoft from 338. It's trading right now at 423. So I like that mix. So it's this webinar is going to be a very functional one. I'll do some of the Chapman wave notations, etc., but I will stop the camera at that particular point so that people can take a picture of it or stop it when they look at the archive. But for those who already know all these techniques, I'm moving on quite quickly. So it's really one that says, these are the stocks, these are the positions, these are the ETFs or whatever it is that we're looking at. This is what we are wanting to buy over the next period, because this particular environment really is allowing this particular sector to now break out to the upside. And we'll talk about sectors that could stall. So it's going to be a very pragmatic webinar.
Yeah, and you brought up a great point earlier as well. You know, getting in and subscribing as soon as possible. You have an update every day, right, for the opening call newsletter. That is so important just by itself, right? But especially preceding a webinar like this, when we're talking about, you know, what is going to win going forward in this market that's kind of changing. You know, great point. So absolutely, guys, if you're listening and you want to get in on this, you should do so ASAP so you can start getting those newsletters in. And you can prepare for Thursday at 4 o'clock and 5:30 p.m.
Yep. Every week I try to get it done Friday. I used to do it Saturday, but now I try to get it done Friday. I do a video of about an hour. The last one was about an hour and a half because there was so much to discuss
Right.
after the election. And we were in the right positions for going into the election and coming out of it. So it was very important to spend some time. So every weekend, if you want to take the time, you don't have to, but if you want to, I go through all the positions that we have, what we're looking at, why we're looking at it, and what we've anticipated what's come about and what we hope will happen based on the technicals for the next period.
Yeah, it's such a value-added thing to have that Friday release as well. Well, Basil, thank you so much. We'll see you tomorrow at 10 a.m.
Thank you very much, Jacob. Have a great evening.
Take care, Basil. Folks, stay right there. We'll be right back. We're going to get Tim Ord of the Ord Oracle on right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You are watching the Tom O'Brien Show. We're working right now to get Tim Ord on the line. In the meantime, let's take a look at what we got going on. The composite off about 0.10% right now, trading at 19,279. The Dow Jones Industrial off about 0.68%, trading at 43,993. You have crude oil kind of flat right now, trading at $68. You have the E-mini off about 0.24%, trading at $6,016. Oh boy. Russell off about 1.87%, trading at 2,403. Some interesting price movement today in Cameco Corporation. We're going to go through, if I have time today, and if not, we can do it tomorrow as well, kind of the earnings report they had. So you can see they actually did miss, but it's important to kind of understand why they missed. There was a large cash outflow they had. It seems like they actually are primed pretty well. There's been some interesting discussion. I saw just a little headline on this of Trump's, drill baby drill plan, kind of outcompeting uranium. No doubt in the short term we're going to continue to use natural gas and stuff like that. But I still think this industry is so poised for success, and I think a lot of the people at that higher level are starting to see that as well. It seems like you have Biden right now pushing before he gets out of office to expand the use of uranium. Now, the other uranium providers are not seeing this move up today, so this is particular just to Cameco. You have UEC off, you have UUU off as well, but we'll talk about that at a later date. Right now, we are joined by Tim Ord of the Ord Oracle. Every Tuesday and Thursday, Tim Ord comes on the show, and he shares with us one of his most, really one of the best analyses that I've seen. Let's take a look on TFNN.com. If you go to the Services tab, you get the Secret Science of Market Tops with Tim Ord, and then 6 secret ratios every trader should know with Tim Ord as well. It's a straight lecture series. Whenever you listen to him, if you ever want to know kind of more about why he's looking at certain things and then how that kind of fits in to the grander picture, these webinars you have got to get. Those are $149 each. You can watch at your leisure. Keep going back to them whenever you want. Tim Ord, welcome back.
All right. Got a lot of calls on gold here over the last couple of days, or the gold market anyhow. Yeah. And so I think it's important to look at that, see what's going on. Okay. So let's take a look at chart 1.
Give me 1 second to get it up. I think we're good to go here.
Okay, you good to go? Okay, yep. This is a bigger trend. The week or the monthlies rule the weeklies rule the dailies rule the hours, and all the way down. So to really keep with the trend, you should look at the bigger trend and trade in the direction of the bigger trend. So the chart we're looking at right now is the monthly GDX, and that's the middle window, and it goes back to 2009. And the bottom window is the monthly cumulative advanced decline with this Bollinger Band, and the top window is the cumulative up-down volume with this Bollinger Band. Signals, it's kind of like a repeat, but this will get us to where we need to go. But the signals are generated when both those indicators, that's the top window and the bottom window, close above the mid-Bollinger Band, and sell signals are created when they close below the Bollinger Band. And the last signal triggered was back in May of 2024. Both closed above the mid-Bollinger Band. It doesn't try to catch the exact bottoms or exact tops, but it does catch. It does keep you in the trend, and the trend is where you're going to make the money. So anyhow, it gave a buy signal in May of this year and remains on a buy signal, as you can see, both those indicators above the mid-Bollinger Band. So let's go to the second window. And that's the same indicators. The bottom one is GDX, or the GDX/GLD ratio. But the next one up window is the weekly cumulative up-down volume with this Bollinger Band. The next higher window is a cumulative advanced decline on a weekly time frame. And both those indicators are above the mid-Bollinger Band. They're kind of backing off right now, but the buy signals are still valid, put it that way. So it's a monthly buy signal and a weekly buy signal. So nothing's changed on the bigger time frames. So let's look at the dailies to see where that is. Okay, the bottom window is the GDX-GLD ratio on a daily with this Bollinger Band. The next window up is the GDX Advanced Decline cumulative with this Bollinger Band. Next window up is the up-down volume cumulative daily with this Bollinger Band. The top window is GDX. Okay, so there's several. These indicators are really useful, but I marked the times when 3 of the 4 indicators broke below the lower Bollinger Band. Those are red lines, and 3 let's see here. Yeah, I should have done it the other way around. That should have been a blue line. But anyhow, when 3 of the 4 indexes, so we got 4 indexes on there, when 3 of the 4, or all 4, close below the Bollinger Band, that's a buy. When they close above the Bollinger Band, that's a sell. And the red lines are the times when the buy signals were triggered, and the blue lines, the dotted blue lines, are the sell signals. So this indicator since May gave 1, 2, 3, 4, kind of 5 sell signals, or 6 actually sell signals since May, and those are just consolidations in an uptrend. So, so they got you out. The market consolidated and started going back up again. But now we're back. The last signal came in, looks like late October, and all 4 indicators got above the upper Bollinger Band, and that's that red line red dotted line I have drawn in late October there. So you can see all 4 indices above the red Bollinger Band. Now I got a green shaded area where we are right now as of today, and we're all hitting the lower Bollinger Band right now, all 4 of them. So especially the bottom one, the one's way below the lower Bollinger Band. So you can take this indicator way back a bunch of years, it gets kind of blurry, but this goes back a good year. It looks like about a year and a half. And so we're obviously, the bigger trend's up. The weeklies are on a bicycle, the monthlies are on a bicycle, and now the dailies are flipping to a bullish configuration right now, as all 4 of the indexes are hitting their lower Bollinger Band. So we're at a low. So and this is typical when the market kind of, I guess, falls like a, catching a falling knife, they always call it. Well, this indicator is good for that type of falling, catching a falling knife. So,
so we're expecting
basically
really changed. So
go ahead.
I was going to say we're essentially expecting a reversal right here. But Tim, actually stay right there. We'll be right back after the break.
All right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Schub. I'm joined right now by Tim Ord of the Ord Oracle. Again, if you want to check out some more of what Tim has to offer, you can go to the ord-oracle.com. Additionally, you can go over to the services tab of TFNN.com, and we have 2 fantastic lectures from Tim. That is the secret signs of market tops and 6 secret ratios every trader should know. Tim, before we went to the break, we were just wrapping up the daily GDX chart that you had there.
You got any questions about it, or we're definitely in an uptrend. So this is the biggest correction, I guess, for GDX since the rally started back in
yes,
it's probably March or something like that, and that's normal. I mean, you can't have the market kind of just keep going straight up. It needs a consolidation phase to build strength. But we're probably hitting one right now, but we're hitting a low right in this vicinity. So, and actually, if you go back to chart 1,
yeah,
if you look at the middle chart there of GDX, I got I got a shaded pink area on GDX.
Yeah.
You see that around 35 to 37 in that vicinity. Well, basically, that's the previous highs and kind of previous lows. And that's where that market should find support. And so going back to chart 3, that's probably why this indicator are down where it is. So we're at a support area, I'll put it that way. So, and how high will we go? At a minimum, we'll go back up to the previous highs. But if you go back to chart 1, again, I have 2 circles on the GDX chart, 2 blue circles.
Yes.
And we ran into the 2020 high, kind of stalled, and now we're back to support. And we'll take another run at those highs again. And basically, to give a projection where the next high will be, the next significant high will be, not the minor high, you take the distance from that trend line, which is eyeball, it looks like about 41, and you take the low, which is about 21, and you add on that to that red trend line, and you come up around 60 or so, 62 maybe. And that'd be the next significant upside target, which if you look where it is, that's the old 2011 highs.
Yep, right around here. How about that?
Yeah.
That's neat. That's neat.
So anyhow, that's probably the next, after we fool around here a little bit, we'll probably head back to 2011. And what happens there depends how long it takes to get there. If it gets there fairly quick, say, early next year, say March of next year, then the market's not projected to hit any significant high until at very earliest of November of 2025.
I see. Okay.
So if we get up there, say in March of 2025, we still got 6 months to go. And so I don't know if that will be a significant high or not. Maybe we'll go right through it. So we'll have to wait and see. But this is not a top of any consequence. If anything, you're looking at a low in this vicinity.
Fantastic.
So anyhow, We can go on.
Yeah.
So
let's
I'll let you
check out
questions.
this trend. I know we got this. The S&P itself has just been moving so heavily. So I'm interested to see what the trend is showing us regarding that. I have chart 4 up right now.
All right, the bottom window is the 10-day trend, which is the top window, never got to 1.2, and sometimes it does, sometimes enough. You like to see it do, but the 1 day or the bottom window is the 3-day trend. The next window up to 2-day trend. Next window up to 1-day trend, and I got it shaded in light pink. And all 3 of those got in bullish territory, but the top one is the 10-day did not. So is that mean something bad? Not necessarily, but I did go back and look at the 2016 low and 2020 low where Trump was a candidate, and the 10-day trend did not get back to 1.2 back in those 2 time frames either. So why it doesn't or does, don't know, but we got enough panic, at least on a short-term basis, to keep this rally going until at least year end. And from there, I don't know. So we'll have to wait and see.
Yeah.
But I'm expecting this. Of all the quarters of the year, this is the strongest quarter. So you'll see some consolidations, minor ones, but in general, this market's going to keep moving higher. So let's take a look at a short-term view. So we got the trend over November 4th time frame. Got the 1, 2, and 3 trend in bullish territory. So kind of seeing what's going on here. If you look at the top window, that's the SPY tilt ratio, and that ratio pretty much trends with the market. And if it doesn't, then there's a divergence. But if you notice, back in July of this year, the market was moving higher, and the SPY tilt ratio was actually moving lower, or wasn't. The S&Ps was making higher highs. That ratio was making lower highs. Put it that way. And the market kind of fell back. Kind of same thing happened in that September or late August, September pullback. We had. Even though it did hit a new high, it did turn down. And going into the July 4th time frame, there was a small divergence, but not much. Didn't really get a great signal on that. Kind of had to fight a little bit to get going. But anyhow, right now, which is the SPX tilt ratio is making higher highs. And the S&Ps were down today, but that ratio is still making higher highs, so we're going to go higher. This could be just a mild consolidation. We got support at previous highs, which is pretty much where that gap is 585. If you count the days up going into yesterday, you're up 5 days in a row. At 5 days in a row, predict the market will be higher within 5 days, 73% of the time. So whatever's going on right now, it's not going to last long. Can we be down tomorrow? Maybe. But in general, we're going to move higher here because this ratio is making higher highs. And so that kind of is going to drag the market up at some point. So, again, I'm keep saying this probably this year, the rest of this year in general is going to be higher than where we are right now. And we got 2 minutes to go. This is a weekly chart. Let's go to chart 6.
Yep.
And upside is probably going to be a little stifled here, but if you get above the Bollinger Band, and I got circled in blue, the times were above the Bollinger Band. If you notice next month, even on the going up above the upper Bollinger Band, if you get above too much, usually the next week is a consolidation week, and I circled those in blue. You can see how that kind of works. So last week we did close up above it a little bit, but you want to be 50% above it. We just closed above it. But what that doesn't really mean, if we were 50% above it, I'd be a little bit worried that we could have a decent correction. But we're just, maybe 5 or 10% above it last week. But that's going to kind of take some energy to the upside out of the market. So most of the time, you'll just hover against that trend line going up. And that's probably what we're going to do. So we'll probably get past 650s, we'll be probably year end, be my guess, will be around 650. Not a huge amount higher than where we are, but it'll trend against that upper Bollinger Band as we keep going higher. So, it's bullish, trends up, and all of the corrections, meaningful corrections, are over this year.
Right.
Not saying every week's going to be an up week, but in general, we're going to trend higher into year end.
I mean,
so,
it's just amazing to see. Yeah, no, it's just amazing to see how much juice has been in this market, that still is. And Tim, it is always so great to have you on. We're going to see you Thursday, all right?
All right, see you then. Thank you.
Take care, Tim. Folks, stay right there. We'll be right back just for a short segment to wrap the show up.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Jacob Shoup, you're watching the Tom O'Brien Show. We were just joined by Tim Ord of the Ord Oracle, as well as Basil Chapman earlier on in the show. If you missed either of those segments or kind of want to go back over them, review them after the end of broadcasting today, you can definitely do so. You can go to Tiger Financial News Network right on YouTube. Our producer is hard at work getting both of those segments up. If you decide to do that, please consider giving those videos a like and consider subscribing to our YouTube channel because it helps us all out immensely. We can continue to bring you the kind of content that we do now and only get better. Again, Tim has two fantastic lecture webinars with the secret science of market top. So when you hear him say stuff like, this isn't a top of any consequence, if you want to know how he's kind of discerning that, you've got to check out this webinar. It is fantastic. And then additionally, he has the 6 secret ratios every trader should know with Tim Ord. Let's look at what we got going on right now near the end of the day here. We have the composite off about 0.11%, trading at 19,276. You have the Dow Jones Industrial off about 0.88%, trading at 43,905. You have that dollar trading up about 0.37% at 105.96. Man, we are moving. A lot of the currencies have fallen against the dollar today. Crude oil kind of sideways right now, trading at $67.99, roughly at $68. The E-minis off about 0.34%, trading at $6,011 right there. And then the gold contract really traversing back down away from its highs at that 28.01. Yeah, I mean, we're nearing, about to break past that 2,600 level. Copper off about 2%, trading at $4.14. The Russell off about 1.9% at 2,402. And then our boy silver actually kind of positive right now, at least for the day, up about just 1% at $30.91. Tesla also getting kind of cooked right now, off about 6.12%. Folks, thank you so much for joining me today. I'll be with you. I got you all to myself tomorrow, Wednesday. But we're going to be joined by Tommy O'Brien, 9 a.m. morning market kickoff, followed by Basil, Chapman, Steve Rhodes, Larry Pesavento, and then, of course, as I just said, myself at 3 p.m. Take care. I hope you all have a great rest of your day.